Hello guys, this is AA James of Dasley FX. I just want to do a quick video on the next move regarding gold, and I felt let me share it with everyone. And this is how we're able to cut about 3,000 pips on gold with the previous analysis that we did. That was released on the 6th of October. Okay, today is the 4th of December. If you have not subscribed to this YouTube channel, please kindly subscribe, turn on the notification button so that you can get notified when content are being uploaded. Make sure you like, you share, and you also comment. If this is your first time, you're very much welcome. And if you're returning, thank you for believing in us and for returning. Let's get started. Basically, we have an uptrend, we have a downtrend, and we have a sideways trend. Gold is in what we call an uptrend. And why is gold going up? It's simply because of the whole crisis, the economic crisis that is happening. Now, gold moves in contrast, in divergence to the economy. If the economy is in crisis, gold will increase because people will take out their money from regular business and begin to put it in the safe havens, and gold is one of the safe havens assets. That is simply the reason why gold is increasing, because of the crisis all over the world at the moment. Okay, so that's why we have gold increasing. By the principle of what we call an uptrend, we have a low, a high, a higher low, a higher high, and it continues like that. Okay, so we have a low here. Okay, we have a high, we have a higher low, we have a higher high, we have a higher low. All right, this was where we picked our entry from, and we made close to 3,500 pips. All right, let me show you. Okay, so this is the Dasley group, and now you can see that as of November 2nd, our first entry had already made 2,000 pips, second entry had made 1,015 pips, and the third entry has made 715 pips. Okay, you can actually see the before of the USD CHF right here, and you can also see the after. Okay, you can also see the before of Euro USD, and you can also see the after of the Euro USD. All right, so let's get back to the charts. So by the principle of an uptrend, this is a low. Okay, let me quickly label this. This is our low. This is going to be our high. This is a higher low. This is a higher high. This is another higher low. This is where we came in the last trade. This is now a new higher high. We see it. So what is the market going to do? What are we expecting gold to do right now? There is one thing that I'm personally expecting gold to do, but it's going to do that one thing in two locations. Just where we have the demand zone here, this guy moved from this place. All right, similarly, we are expecting that gold is going to move from here. We have a drop, we have a base, a rally. So we have this guy here. This is our weekly, this is our weekly demand zone, right? So we're expecting gold to move from here, or we're expecting gold to come down into this place and move from here, all right? This is our expectations. So gold is expected to return and pick up from here, and the least target is going to be here. That's going to be the structural target. Let me find it. TP structure, yes. So that's the structural target. The second expectation is that gold will come down into this place. All right, this is the second expectation of gold. The first expectation of gold is that gold is going to move from here. The second expectation is that gold is going to move from here. All right, but just like gold did here, there are what we call internal structural movements. There could be internal structural movements. So if you get back to 4-hour time frame, you can see that already gold has broken previous structure, which is now being a change of trend. On the 4-hour, gold has given a change of trend, which means gold can actually pull back and continue down. This is a possibility. Okay, it could decide not to pull back at all. Do not confuse this as a pullback. A pullback has to be a significant wave for at least 50%, okay, for at least 50%. So if this is the wave, a significant pullback is going to happen around these areas. Supply areas is close to the 50% also, anywhere around this area. The pullback is expected to happen anywhere around these areas. Something like this, okay, then drop. But most likely, I don't think it's going to exceed that the body of this candle, okay. But if it does, that's no problem. It's all fine, okay. That's the expectation. It is called expectation. It's a forecast. It might not happen. So if this happens, okay, that's going to be a counter trend. All right. So, but for me, I would be waiting for gold to come down into these zones. All right. My first weekly demand zone and my second weekly demand zone. And if I have to trade at all, I will simply go to the 4-hour time frame. There is a change of trend already. Then there's a break of trend line, guys. There is a break of buy trend line. So now it has been broken by an impulse. I'm expecting the market pulls up, and I'm going to look for my confirmation entry for a sell, a counter trend sell down into my weekly zone. If I have my confirmation on my weekly zone, fine. So the immediate expectation of gold is that gold retraces to the supply zone. Okay, let me change this. On the immediate, guys, on the immediate, I'm expecting gold to pull back into the zone. Then I'm going to pick a sell down into the weekly demand zone. All right, this outlook is specifically for gold. If you are trading gold, be careful because even Friday is NFP. So that's my time today. Once again, my name is AA James, founder of Dazzly FX. Remember to subscribe to our YouTube channel, turn on the notification button. Make sure you like, you comment, and you share. If skin no food, do it, or more body. Thank you very much. Bye bye.